Dear students, in this video, we'll learn as to how to compute income from salary. This is video number 22. I'm Dr. Pantranganayak, Principal SKS College, Bangalore. Okay, this here is Ashish Roy, the Chief Marketing Executive of Nippon Motors Limited, Bangalore. He furnishes the following details of his emoluments. Basic pay 20,000 per month. So it is taxable 20,000 into 12. DA that is 30% of basic. So 30% of 20,000 per month into 12, or else of the total basic you calculate 30%, that is taxable. And what is given in the bracket, that is 25% of Provident, 25% of DA for Provident Fund. So while calculating the contribution to Provident Fund, that should be taken. Similarly, if rent-free accommodation is given, for valuing that, that is to be taken. Bonus 1 month basic, taxable. Diana's pay 1,000 per month into 12, so that is taxable. But 30% of Diana's pay, it is considered for Provident Fund contribution as well as for rent-free accommodation. Commission at 0.5% of turnover of rupees 50 lakh. So that is taxable. 1% means 50,000 and 0.5% means 25,000. So that's taxable. CCA 500 per month. City compensatory allowance. It is taxable 500 into 12. Medical allowance, it is fully taxable 300 into 12. Servant allowance, that's also taxable, fully taxable. 400 into 12. Traveling allowance for visiting branches, rupees 20,000. 70% is spent for official purpose. What is spent for official purpose is exempt. So what is spent for either for private purposes or unspent, that is taxable. Academic allowance, that is to pursue maybe research or for academic development. So that is fully taxable, that's fully exempt. So 600 into 12. So that is academic allowance. OTAM allowance 1,000 per month, so fully taxable. Has been given a rent-free house, the fair rental value of which is 1,20,000. So when fair rental value is given, it is assumed that the house is owned by the owner, that is employer. Therefore, to value that, population comes into picture. So population is given more than 30 lakh. If that is the case, perquisite value is 15% of salary of employee. What is salary? Salary means basic. That part of DA and DP which enters into retirement benefits or Provident Fund contribution, bonus, then commission, then all taxable allowances. That's all. Then what is given here? He contributes 12.5% of salary to recognized Provident Fund to which his employer contributes equally. So here, let us take employer's contribution. Employer's contribution to recognized Provident Fund in excess of 12%. So up to 12% it is exempt. So over and above that is taxable. Here salary means what? Salary means basic, and that part of DA which is considered for Provident Fund, and that part of DP which is considered for Provident Fund, and commission based on turnover. So these are the items to be taken for salary while computing contribution to recognized Provident Fund. Only 0.5% is taxable, 12% is exempt. The interest credited to Provident Fund account during the year, 10% amounted to 50,000. So here, interest credited to Provident Fund up to 9.5%, it is exempt. So half percent is taxable here. 10 minus 9.5. Half percent is taxable. The calculation is 10 is equal to 50,000. What is 5? No, sorry, what is half percent? What is half? That's all. 0.5. If you find a calculation with the help of half is difficult, you can take 0.5. So 50,000 divided by 10 into 0.5. So it is like this. 50,000 divided by 10 means 5,000. Half of that is, so 2,500. That is taxable. The company provided 2 cars for official as well as personal purposes. Company spends 24,000 on each car for maintenance and wear and tear. One driver is provided who is paid 2,500 per month. CC 1,000, 1.4 and 1.8 liters. So here your intention should be less taxable value. The taxable value is more, you have to pay more taxes. Therefore, you have to minimize the taxes. For that value should be less. So one car, better one smaller car, you take it as used for both official and personal purposes. So small car, below 1.4, 1.6, 1.6 or less than that, that is considered to be small car. So in that case, the rate is 1,800 into 12. Plus, we will take driver's salary here. So 900 into 12. So that is the value of one car which is used for both official and private or personal purposes. Smaller car. The other one is bigger one because it is more than 1.6 liter cc. So in this case, we have to assume that it is exclusively used for personal purposes. But here only maintenance expenses are given. If it is owned, you have to take 10% depreciation. But here it's not mentioned. Therefore, we'll assume that it is higher. Therefore, just maintenance expenses. What are maintenance expenses? 24,000. So 24,000 is taken as the perquisite value of the second car. So I repeat, first car is assumed to be used for both for personal and private purposes. So car is smaller one. So 1,800 into 12. If it is bigger one, 2,400 into 12. So here 1,800 into 12. Plus driver's salary 900 into 12, whatever may be the salary paid to him. And then as far as other car is considered, it should be assumed that it is used exclusively for private purposes. So running and maintenance expenses are taken as perquisite value. The company has provided the service of gardener, the taxable, cook, taxable. So both are given in terms of per month. So that should be multiplied by 12. His 2 sons and his brother's child get free education in the school approved by the company. The cost of education is rupees 1,500 per month per child. For your information, if the educational expenses are equal or less than 1,000 for free education in a school maintained by the employer or sponsored by the employer, that is exempt. But if it is more than 1,500, it is fully taxable. 1,500 into 12 into 2, because the value here is more than 1,000. Till 1,000 it is exempt. But if it is more than 1,500, full amount is taxable. Suppose in some books they take more than 1,000 as taxable value, but it is not correct. So 1,500 entire amount is to be taken as taxable value. And as far as the education to brother's child, then it is fully taxable. What is the actual cost? That is to be taken as perquisite value. Here 1,500 per month. So in this case, if that is the case, all the 3 children, their education expense of 1,500 into 3. Alright. The company had advanced 5 lakh as car loan at 6% per annum. During the year, he paid rupees 24,000 as interest. SBI rate is 11.5%. So you have to compare the loan which is advanced to the employee at a specific rate, that is 6%, with the SBI rate. So SBI rate by lending it is 11.5, whereas we have advanced it at 6% per annum. That means the concession is 11.5 minus 6%. So it is 5.5. Now how to calculate the interest perquisite value here? See, at 6% it is 24,000. 6 is equal to 24,000. What is 5.5? That we have to calculate. In other words, 24,000 divided by 6 into 5.5. That we have to calculate. Don't apply percentage and all those things. So how to do is 6 is equal to 24,000. What is 5.5? Okay, that we have to calculate. Or else what you can do is 6% is equal to 24,000. What is 100%? And then after that, yes, 5.5% you have to calculate. Don't go for long lengthy procedure. Now, some of you may tell, why don't you calculate it on 5 lakh instead of considering just interest amount? See, no doubt loan advanced was 5 lakh, but when it was advanced, we do not know. If that is the case, if both the information is there, you have to take this interest amount. But if this second part is not there, that is during the year he paid rupees 24,000 interest, then of course we do not have any other go. On 5 lakh, you have to calculate at the rate of 5.5. Then you will get the concessional value, that is perquisite value. We stayed in the company's holiday home meant for executives only. So it's not uniform. It is specifically for executives, and it is not for the benefit of the company, and therefore entire 8,000 is taxable. The company gifted him a watch costing 6,000. So gift or gift in kind in aggregate up to 5,000, it is exempt. If it is more than that, if the aggregate value of gift it is more than 5,000, then entire amount is taxable. So it is 6,000 taxable here. Supposing it is 4,800, that's not taxable. So if the value of the gift is more than 5,000, that's fully taxable. The company paid his club membership fee 12,000 during the year. So not uniformly given, we have to assume. So it is taxable. And supposing becoming a member of a club so as to help the company, then it cannot be taken as taxable. But here, no such information. If nothing is mentioned, we have to assume that it is purely his private this arrangement, and nothing is derived by the company from the SSC being the member of a club. Therefore, it is fully taxable. He is allowed to use the computer of the company costing 60,000. So when the assets are used by a member of the company, then that has got perquisite value. But that exclude computer and laptops. So here computers are allowed to be used, and therefore the perquisite value of that is nil. So that way we have completed everything except see here compute the taxable salary considering the professional tax paid rupees 200 per month. So professional tax 200 into 12. So that comes under deduction from gross salary under section 16 subsection 2. Well, I have explained every item, but still let us go through the solution. The basic salary 20,000 into 12, 2,40,000 fully taxable. DA 30% of 2,40,000. So or else 20,000 into 30% into 12. That 12 you can calculate. Bonus 1 month salary, so taxable. DRNS pay, yes, 1,000 per month. So for 12 months, 12,000. Commission 0.5% of 50 lakh. So that comes to 25,000. CCA is fully taxable. Medical allowance is fully taxable. Traveling allowance to the extent it is spent for personal purpose, so that is taxable. What is spent for official purpose is exempt. Academic allowance is exempt. Then overtime allowance, overtime allowance, so it is fully taxable. Academic allowance, it is exempt if you assume that it is fully spent for academic purpose. If any part of that is unspent, then taxable. Recognized provident fund contribution by the employee about 12% of salary. Here what you have to take is basic, then that part of DA which enters into provident fund calculation, and also that part of DP which enters or which is considered for provident fund contribution. Then half percent of commission based on turnover. If simply commission is given, it is not be taken. The total is 2,86,800 of that 5%, so 1,433. Then interest on recognized provident fund above 9.5%, here half percent you have to take. So I'm sorry, here it should be 10. 50,000 divided by 10, so you will get 5,000. Of that half, so 2,500. So I'm subject to correction. Here it is not 100, it is just a 10. Please bear it in mind. So 10 is equal to 50,000. What is half percent or 0.5? While explaining the adjustments or the details, I mentioned this, but here I have committed a small mistake. 0 has come here unintentionally. Okay. Value of rent-free accommodation is 15% of salary. How you get 3,39,000? It is given separately. That includes basic, that part of D and DP which is considered for contribution to provident fund, then bonus, commission, and all taxable allowances, but not to take perquisite values, and also even contribution to recognized provident fund. So here population is more than 25 lakhs, so 15% of that, so 50,850. Perquisite value of furniture, so it's given here. Cost of furniture is given 1,50,000, and therefore of that 10%. So if nothing is mentioned, we have to assume that it is owned by the SSC. If you consider that it's owned by the SSC, cost you have to take 10% of that is to be taken as perquisite value. So 10% of 1,50,000 is 15,000. If it is higher, then actual higher charges should be taken. But here it is owned. Then the motor car, I told you there are two cars. One is smaller one, other one is bigger one. We have assumed that smaller one is used for both official and private purposes. So 1,800 into 12. And driver's salary, whatever may be the salary paid to him for tax purposes, 900 into 12. Second car, we assume that it is used for purely for private purposes or exclusively for private purposes. So actual running and maintenance expenses 24,000. Gardener's salary is taxable, cook's salary is taxable, free education. I told you if the institution where the students study, children study, if it is owned by the SSC, owned by the employer or sponsored by the employer, it is exempt up to 1,000 rupees. But if it is more than that, the full amount is taxable. So 1,500 into 2 children. As far as any member of a household, that is brother's son or sister's son or daughter, something like that, that is fully taxable. Therefore, here for 3 children, for 3 persons, 2 children of the SSC and 1 relative. So together 1,500 into 12 into 3. Then concessional interest, yes, it should be compared with the State Bank of India rate of advance. That's 11.5, 11.5 minus 6, 5.5. 24,000 by 6, 24,000 divided by 6 into 5.5. In other words, 6 is equal to 24,000. What is 5.5? Facility of holiday home. So we have to assume that it has nothing to do with the business. So purely personal. So full amount is taxable. Perquisite value of gift. aggregate value exceeds 5,000, so taxable, fully taxable. As far as gift in cash or in gift coupons, it is fully taxable, whatever may be the amount. Facility of holiday home taxable, perquisite values over club membership. So it has nothing to do with the business. It does not help the business. Therefore, it is purely for the benefit of the SSC. Therefore, it is fully taxable. And if it is not uniformly provided to all the members, then it is taxable. If it is given freely for all the members, then it is not at all taxable. Club membership, taxable. Perquisite value of computer, it is taxable actually, except computer as a laptop. So here it is computer, therefore taxable value is there. So gross salary comes to 6,42,783. Alright, next. From that you have to deduct three things. One is standard deduction, section 16 subsection 1. It is, sorry, it should have been 50,000 here. Once again correction, it should be 50,000, not 40,000. Last year it was 40,000. This year, for previous year 1920, it is 50,000, not 40,000. And subject to correction once again. Professional tax under section 16 subsection 2, 2,400. And entertainment allowance under section 16 subsection 3, it's not applicable here. So forget about that. So 6,42,000 minus 52,400. As a result, here there is slight change, 10,000 less value. You have to take 5,90,383. And subject to correction again. Okay, let us see the notes. Since parental value of rent-free accommodation is given, we have to assume that rent-free accommodation is owned by the SSC. Academic allowances for pursuing academic excellence, such as research, and exempt to the extent of amount spent for academic purpose. I already explained these things. Since this problem does not specify the amount so spent, it's assumed that entire amount is spent for research and hence fully exempt. That portion of DA and DP which enters into retirement benefits is considered for Provident Fund calculation as well as for rent-free accommodation together with basic and commission if based on turnover. Then, free education is exempt up to 1,000 per month per child in a school approved by the company. But if the amount exceeds 1,000 per month, it is fully taxable. For other members, this is fully taxable, whatever may be the free amount, whatever may be the fee. Perquisite of loan advance already explained, so 11.5% minus 6%. And while the use of movable assets owned by the employer is a perquisite in the hands of the employee, there is an exception. It does not apply to laptops and computers. In our case, it is computer, so it doesn't have perquisite value. If more than one car is used by the employee for official and private purpose, the perquisite value of one car of 1.4 cc is taken, that is 1,800 per month. Driver's salary 900 per month, whatever will the salary paid to him. The perquisite value of other car is assumed to have been used fully for private purpose, is taken at the expense incurred by the employer. That is, the actual running and maintenance expenses are taken as perquisite value. If holiday homes are provided to the employees not uniformly, the perquisite value is the actual expenses borne by the employee. Gifts to the employee up to ₹5,000 in aggregate is exempt. If the value exceeds 5,000, entire amount is taxable. Gift in the form of cash or gift checks is fully taxable even if the amount does not exceed 5,000. Club membership fees is fully taxable. It's assumed that fee is not paid for the benefit of the employer. So by this, I have completed this particular problem. A lengthy problem, but includes many items. So if you are very thorough with this problem, definitely you'll be able to compute. You'll be able to solve any other problem. Of course, here and there might be small other items. Okay, thank you.